All right, we're talking about Evertec today, EVTC on New York Stock Exchange. We have a guest who's going to help us out. His name is Luke Corbeth. Luke has worked with us in the past. He knows all about our models and cash flow and how we think. So Luke, welcome to our channel.
Thanks for having me, Matt.
All right, so we're talking about Evertec today. You brought it to our attention. Tell us a little bit about the company.
Yeah, so Evertec provides payment solutions to merchants with operations in Puerto Rico, the Caribbean, and Latin America. They break down their revenues into 4 primary segments, but business solutions represents 41% of their revenue. And this encompasses their payments infrastructure, cloud services, and business management services.
Okay, so obviously you brought it to our attention, and that would mean you're bullish on it, I would assume. So tell us some of your bullish points.
Yeah, so I'm actually very bullish on the payments industry in general post-COVID. I feel as though social distancing has forced reluctant merchants to adopt online purchasing, or at least an omni-channel presence. And this is particularly interesting in cash-heavy societies, such as Latin America, where Evertec operates. I feel as though they're best positioned to assist these merchants, given the increase in demand. And this can be seen in their revenue growth of 3% year over year. The next thing is, since customers are coming into stores, they're purchasing more at one time, their average ticket has increased. And as a result, in such a low margin business, this should really improve their bottom line. The other thing is Evertec's customers are largely small retailers like gas stations and supermarkets that are either deemed essential business or have low enough foot traffic that they'll be able to reopen in the first phase of reopening. The last thing is I really like their balance sheet. They stayed very lean, which is definitely ideal during a economic downturn. And it also leaves the door open for them to keep kicking the can if this economy stays the way it is, but also engage in M&A activity if the opportunity presents itself.
All right, good analysis. What are some of maybe the risks you want to tell people about?
Yeah, so the largest risk is mainly if they are to engage in M&A activity, it's going to be a lot more difficult to leverage the synergies they're hoping to achieve, mainly because training and some operational expenses are heightened at a time like this. Okay,
great analysis. I'm going to show the model as we do for every company when we do these type videos, and I think you'll be quite impressed with Evertec. So jumps off the page right away. High return on invested capital for about 8 years there. It's running in the 50s. And the last fiscal year was 46% return. As Luke said, good balance sheet, not that levered, pretty good working capital position. Valuation-wise, actually pretty simple. Our default seemed to be appropriate. We didn't have to tweak it. We're getting a $38 value on a $27 stock, which is roughly 40% upside. I actually think I could pull a few levers on maybe growth and maybe not fading as much as it is, but it's nice to know, even on a conservative forecast that we have some upside. Maybe a little bit on the trading. It did come down a little bit during the COVID and has rebounded, but not fully rebounded. So I like that profile. We've been looking for that quite a bit. So there you heard from Luke, and you heard from our model as well. Let me just bring Luke back in and thank him for his time. Luke, thanks again for coming out.
Thanks for having me and letting me share my take.
All right, guys. So that's Evertec, EVTC on New York. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.